2015 was another year of strong transaction activity across Australia's commercial property markets, although in the end total volume of activity was slightly below the 2014 record level. From a cross-border perspective, both inflows and outflows of investment were at record levels. High levels of volatility across global equity markets and foreign exchange markets, which characterized the second half of 2015 and in fact the early weeks of 2016, have probably convinced some investors of the benefits of a diversified commercial property portfolio. 2015 ended with a surge in values, despite a rise in bond rates and some widening of credit spreads. Supporting the rise in values were positive developments in the underlying economy. Retail turnover, for example, now seems to have stabilized back at the 4% to 5% long-term average level. Employment growth remains positive, although wages growth is subdued. And the arrival of international retailers is providing a boost both to CBD retail and to the logistics sector. Across the two largest office markets, Sydney and Melbourne, Q4 delivered another strong reading in terms of net absorption, although other markets, for example Brisbane, also surprised on the upside. In the case of Brisbane, we saw 25,000 square metres of take-up in 2015, very close to the long-term average level. Sydney's vacancy rate is currently 7.8%. It's been quite stable around that level for the last 9 months. Nationally, vacancy rates have also been quite stable for around the last 2 years, between 11% and 13%. We expect some modest rise during 2016, driven largely by an increase in supply. Values are now back to 2007 levels, or even above them in the case of some commercial markets. Industrial prime yields nationally are 6.85%, an all-time record low. In the case of regional shopping centres, we have yields at 5.6%, which is equivalent to the lowest point reached in 2007. In the case of the Sydney CBD market, the upper or tighter end of the yield is now 5%. This was the lowest point reached in 2007 and also in 1989. Investor appetite for commercial property assets remains strong. Nevertheless, values are challenging in many of these markets. In the latter part of 2015, we saw values rise faster than we'd expected, but of course take-up was stronger than we'd expected as well. We see 2016 as being a year of stabilisation, both in terms of values and also in terms of the volume of transactions. But underlying demand for space is likely to remain robust, supporting both rental growth and also development activity.